Okay, everyone. I'm sure there are going to be some people drifting in, but we're going to go ahead and get started. I think we have one thing we want to show you first before we go into the actual presentation. There's a special treat for you all.
I wanted to invest in alternative assets like real estate, but I wanted to.
What's going on here? My big star moment, and it's being.
I wanted to invest in alternative assets like real estate, but it seemed complicated and I didn't know where to start. Through Quest Trust Company's educational classes, I learned there are options for both active and passive real estate investors like me. I've been able to invest in real estate passively while earning double-digit returns on my investments. And all it took was a few easy steps to transfer my IRA to a self-directed IRA.
Take control of your investment returns. Transfer your IRA to a self-directed IRA. Call Quest Trust Company today.
What do we think of that? Honestly, I'm so embarrassed. I had no idea we were doing that. All right. Well, thank you for being here with us and indulging us on that little commercial. My name's Steve Sabaji. I'm the manager here of the Dallas office and with Quest Trust Company. We're here today with one of our favorite speakers, Katz, who's going to talk about multifamily and the opportunities that are there, despite what some people may be leading you to believe in terms of the real estate market right now. But real quick, I'm just going to run you through a couple of announcements. One thing we always like to talk about is the fact that when you are opening new accounts, you do have the ability, if referred by a current client, to have discounts applied. And this is something you can turn around and do as well. If you're a new account holder and start bringing people over, $25 credits go for the referral. So let me know if that is the case, if you're bringing anyone over. I've had clients who've paid some of their fees basically by the number of referrals that they've had come over. Always available to talk. You know, again, we want to make sure we have educated clients as well about anything and everything with regard to utilizing a self-directed IRA. So you can always call us. There's a live chat on our website. Shoot us an email or just use that QR code and you can schedule time for a consultation. We are also doing a promotion right now where credits can be applied for new deposits being made into your account. So there are various tiers, but the credits are designed to correlate to, again, some of the fees that are attached to our accounts sometimes. So the 125, for instance, is the price of a transaction. That's your transactional fee. So basically by bringing over some money, your first transaction is on Quest. Want to let you know about a big event that's coming up here in this area. It's going to be the Elite Multifamily Summit. It's a one-day opportunity. It's going to be over here in the Dallas area at Las Colinas. It is a follow-up to the Masters of Tax Avoidance that we did in Houston a few weeks ago, and it promises to be a very good event for anybody who's interested in multifamily, investing strategically, things along those lines. So we're really looking forward to it. Keep in touch, look at our website. You will see more details as they're getting closer. And next year, by popular demand, Quest Expo will be back. Those of you who attended last year, you know it was a pretty good event. 3 days, a lot of information, a lot of networking, a lot of vendors, a lot of people learned to expand their network. So promises to be the same. And again, will be a little more localized for those of us here in the Dallas area as it will be in Dallas next year. All right, so with that, I'm gonna bring up Aaron. Again, Aaron has been in the multifamily space for quite a while. So he's got a lot of information to share. Again, he's going to talk about why apartment investing in multifamily is a great strategy to employ. And again, emphasize that the opportunities are there now, which Based on some of the ebbs and flows I've been seeing with our clients, I can attest to that also. All right, take it away.
Thank you, Steve. Appreciate it. Hello to everybody here in the room, and I understand we have some people online watching as well, so appreciate the opportunity Quest is providing me to come up on their stage today and speak to all of you. And I'm going to let you know what I'm going to be speaking to over the next 30 to 45 minutes. Basically, I'm going to talk about three things. Well, first, I'm going to tell you a little bit about who I am and my experience in the multifamily space over the last 11 plus years. Then I'm going to touch on at a high level the benefits of apartment investing, why apartment investing is lucrative, and why you might want to participate in potentially lucrative apartment investment projects with seasoned operators that very typically outperform conventional investments. And I'm going to tell you then what Steve just touched on and why now is a great time to invest in apartments, despite the negativity you might be hearing. In fact, I'm actually more excited now about apartment investing than I was a couple of years ago when everything was going up, and everybody and their mom and their father and their sister and brother was trying to buy multifamily properties. And I'm going to explain the opportunity with what's going on out there in the market right now and the opportunity that's creating for seasoned operators and for you to potentially invest in projects with seasoned operators to take advantage of the current opportunities. And then I'm going to tell you how you can invest. And when I say how you can invest, I mean how you can invest passively in these projects. And then I'm going to talk about the type of returns we're seeing in the projects. And I'll touch on historical returns in a second when I tell you just a little bit about myself. For the sake of brevity, I will let you know that I have experience in small business ownership going back into the 90s when I was in my 20s, sales, management, retail experience, and overseeing, as I said, small businesses and small business ownership, some of which grew quite large. In fact, what brought me down to Texas first in 1995 is I was an original partner in a retail mattress chain that some of you might have heard of called Mattress Giant. Some of you might remember the commercials for Mattress Giant. Ooh, ah. Anybody remember ooh, ah? There we go. Okay, we got one in the back. All right. And basically, I came down, I was an original partner in that project, and then we ended up growing that company and selling that company. And I've touched on several different things in my career after that, other business ventures. And to be honest, most projects I've been involved with in my life have been successful, but I have not everything I've touched has turned to gold. But the things that didn't turn to gold provided valuable lessons that I was able to take and still employ and continue to make me successful as I move into the future. And because I apply that diligence and those lessons learned, most projects that I've invested in have been successful. And I'll touch on how that's translated over to the multifamily space over the last 11 plus years. But I did get involved in apartment investing first back in 2011. I sought a mentor that had been successful in the industry to teach me what they had done, figuring that if I could come in and do what a mentor had done and do it and had done it successfully, and if I followed their steps and took their teachings and applied them, that I'd be able to realize the same success. So bringing that attitude into apartment investing back in 2011, I was able to do my first project, and I'm going to explain what types of projects we typically do. They're syndications or group purchases, and I'll explain what that means and the opportunity it creates for you, the potential passive investor. But my first one was a 90-unit property in Arlington, Texas, back in 2012. It was myself leading the project as the sponsor or the GP of the project, and I had 12 passive investors, and we pooled our money together and bought a 90-unit apartment community at that time. And since then, I've done 13 projects as a sponsor GP, ranging from 90 units up to 360 units. And I'm going to give you some actual historical returns on these properties. 9 of these 13 properties have gone full cycle, which means that we purchased them, we owned them from several years, we achieved our plan, we enjoyed cash flow while we owned the properties, and then we added value during our period of ownership, exponential value that we were able to realize on the gain when we sold the property. So I'm going to give you some numbers on those 9 projects of the 13 that I've done as a GP or sponsor that have gone full cycle. And then the liquidity that came off of those projects enabled me to then, my wife and I, to invest passively in many other syndicators or sponsor GPs projects. And we have 17 passive investments, the type of opportunities that I'm going to talk to you about, because I put my money where my mouth is. I'm bullish on apartment investing, and I'm going to tell you why I'm bullish on apartment investing when I go through the benefits. But I don't take the money that I make from apartment investing and put it into other things. I focus on what I know, the eggs in the one basket, because I know what I'm doing, and I'm confident in apartments and the demand for apartments. And that's where we invest our money, whether it's in my own projects or with other people that I know. Of those projects, the 9, I've never had an investor lose money. The average total return on those 9 projects is over a 100% return in an average hold period of 3.5 years. If you divide that out, that's over a 29% average annualized return. I think everybody here watching online would agree that that's a pretty terrific return, and it's certainly going to outperform conventional investments out there. I take the diligence of overseeing and being part of these projects very seriously. I've done 13. I've had the opportunity to do 50 more, and I say no way more than I say yes, because I want to be conservative. I want to be conservative on the particular projects, and I certainly want to be conservative with the people that I partner with. So I take a lot of time to build relationships and make sure that the partnerships, the business marriages that I'm going to get involved in are going to be solid by doing my own due diligence. That protects myself, and it certainly protects my passive investors that invest in the project with me. I'd like to tell one quick story. When I did that first syndication project back in 2012, I had gotten to know a lot of people and got to know them on a personal level first, because I'm a relationship type guy. And there was one woman that I got to know. Great woman. I met her at a mentoring education organization. She was 62 years old, and she liked me. I told her my vision. She saw that I was somebody that she could trust, and she wanted to invest in that first deal, that 90-unit project in Arlington, Texas in 2012. And she told me she had $50,000 to invest. And she told me that it was basically her entire life savings. It's a lot of pressure, right? But I felt confident in the mentor that I had embraced. I knew that I was absorbing the teachings. I knew that I could take my prior business experience and growing businesses successfully and apply it to this business now that I was absorbing the industry-specific knowledge. So I went ahead and took her investment, because I knew that I knew what I was doing, and I was plugged in with people that would help guide me along the way. And she, over the years, has now repeatedly invested with me. And I've been able to take that life savings that she spent her whole life accruing up to 2012 and help her to grow it to well over $500,000 now in 2023. So I've been able to obviously dramatically change, and she's now in her early 70s. I've been able to dramatically change the trajectory of the rest of her life in her retirement years. I got to tell you, that feels pretty good. How many, do you guys think that would feel pretty good to be able to do that for somebody? And I have been able to make tens and tens and tens of millions of dollars for investors in my projects over the years. And I've been compensated greatly for doing that, because it was Zig Ziglar that says, if you help enough people get what they want, then you can have anything that you want. So I'm getting what I want, but I'm getting it because I'm providing fair value to my investors to partner with me in these projects. So I have a track record, which I think is very important. Now, let me just go over a brief overview. I said that these were syndications or group purchases. So what that means is there's typically a team of GPs or sponsors or syndicators. These terms can be used interchangeably. And they're the ones that basically, we do all the work. We find the property, we analyze it. We've built the relationships with brokers and have the reputation out there that sellers want to award us deals, because this is a competitive industry. People don't just walk in off the street and buy 90 to 360 unit apartment communities, especially in a terrific apartment market like Dallas-Fort Worth. So the syndicators, the sponsors, the GPs, we're doing all the work. And then we typically have built up a passive investor database of SEC compliant relationships of people we get to know. And it might be by speaking here at a Quest event today and then getting to know each other after and building that relationship. So over the last 12 years in the business, I've been able to build up a pretty extensive database. I've raised approximately $50 million in capital over the years to fund my projects from people that I've met just like that. So passive investor means just that. You are passive. You're not involved in overseeing the operations of the investment. Yet there are certainly some elements of control that you will have, and I'm going to touch on that in a minute, that are greater than if you were to buy a stock. You don't get to go sit on the board of directors meetings for a company that you own stock in, but you can certainly get to know the sponsor GP syndicator that's overseeing the project you're considering investing in and have interaction with them before you actually might want to make a passive investment in that project with them. So real quick, that's the overview of the syndication group purchasing. Why I love apartments is namely the method of valuation, and I'm not going to touch on that too deep today, but just know that there's a cap rate multiplier. It's called a cap rate in the industry. Typically right now, cap rates are around 5% or a little bit higher. Basically what that means though is for every dollar of operating income that we're able to come in and realize, and that might be by either increasing income or decreasing expenses if the previous operator that perhaps we're buying a property from wasn't operating it efficiently or watching the bottom line. But for every dollar that we're able to come in and increase the operating income, because of that generalized 5 cap in that give or take area, we're able to realize $20 increase in value. So if we can come in and, without diving too deep into examples, typically we can realize great sums. We're able to increase the NOI quickly and then dramatically add to the value. That's why we're able to come in on these projects and double our money and more, like I've done historically in just over a 3-year period. And I've had deals that were quite a bit higher than that average as well. Deals where investors have come in 2.5 years, more than tripled their investment. So there are lucrative opportunities. Typically what we're seeing right now in terms of returns we're looking for in the current market is an average a return annually of about 5 to 6%. And then over a 5-year hold on the deal, we're looking at about a 90 to 100% total return. So you're getting that 5 to 6% on average back every year through the cash flow, and then through the value that we're able to add through that adding value, and then the exponential cap rate multiplier, we're able to come in and achieve a 90 to 100% total return. So you're looking at an average 20% annualized return, typically over like a 16 IRR for anybody that is familiar with IRR and that metric. So that's what we would consider a good deal right now. Passive investing, as I said, you're able to get in on investment opportunities with those that are already in the game that you typically are not going to have access to. By getting to know experienced, seasoned sponsors that are getting and having access to these types of opportunities, you have the opportunity to get in on these lucrative investments as well. There are some terrific tax advantages and depreciation that's passed through to passive investors on their K-1. And I always advise everybody to talk to your own CPA to see how you can best utilize that depreciation and those tax advantages that are passed through on the K-1. But we do take advantage of terrific accelerated depreciation and bonus depreciation that's still out there right now to maximize the depreciation advantages to offset taxes. And as I tell people, talk to your own CPA to see how you can take advantage of that. But they are really terrific in multifamily. We have great financial leverage or debt. We work with debt partners that put up most of the money to allow us to buy these properties collectively as a group purchase. But then obviously when we're looking at distributing the profits, we don't have to pay our primary partner, which is our debt partner. We're able to realize and enjoy the gains and the profits from the investment ourselves. And as I said, the number 6, and there's more, but this is high level and I want to go through it quick. It's just that control. It's the opportunity to form relationships, get to know the person that you're considering investing with. You often will at different events have the opportunity to talk to people that have invested already with that particular sponsor syndicator and find out what their experience has been. So there's definitely more of an element of control than investing in many conventional investments where you're obviously at great arm's length. Now, this is something that's definitely in the news right now. So I want to talk about why I think that now is a great time to invest in apartments and why I'm personally a little bit more excited. Well, I'm not a little bit, I'm actually quite a bit more excited than I've been in several years, because I can tell you what it was like over the last few years. I got into the business in 2012, still recovering from everything that happened in 2008. And then everything kind of got going like this, and then it got going like that. And I was able to ride that wave up, and it was a great ride. But what happened over the last few years is because everything was appreciating so rapidly and every deal was cash flowing, you didn't have to be a skilled, seasoned operator to do well if you bought a few years back, because the market was just carrying you and it could override any mistakes. Now, the downside to that was when I'm trying to buy properties out there, there's 40 offers on every deal because every mother, brother, and sister is trying to get into multifamily because it's just appreciating and appreciating. So I saw and knew and actually wanted there to be some sort of reset. I'm not saying that I wanted the reset to necessarily happen the way that it has, but I did see the need for a market reset. And obviously that market reset has definitely taken place. And over the last couple of years, there was a move to variable rate debt away from fixed rate agency debt, which is how most people were buying properties up through 2019, 2020. And then all of a sudden, everybody started moving to variable rate or bridge debt because that was able to provide more leverage. And if you were going to be looking at fixed rate agency debt like we've done before, you couldn't get the kind of leverage you needed to buy deals and be competitive. You wouldn't have won these deals. So a lot of people started looking at this type of debt. Now, I did a few deals. I was very cautious because I'd always been raised to kind of turn away from bridge or variable debt, but I realized that unless I was going to completely remain on the sidelines and miss any opportunities that were going to be out there, that I had to go ahead and take a look at this debt. But I wanted to do it intelligently and smartly, and I did do a few deals, and I'm proud to say that, and I don't think it's any big secret that we're hearing about some operators out there that weren't skilled and didn't stay on top of things that have lost deals to foreclosure. And I'm very sad to hear about that, because I'm sad to hear about any investor losing money at any time. And I think there's going to be some more of that, but I don't think it's indicative of multifamily or I don't think it means that we just condemn multifamily investing as a whole. And I'm going to explain how that leads into the opportunity that's there right now. I've written out some chicken scratch notes this morning. I generally have a signature talk that I kind of prepare that has an outline, but I wanted to make it really timely for you today. So I wrote out some of my own chicken scratch this morning. So let's see how I can read my notes. Obviously, though, the interest rates went from being basically very cheap money a few years ago, around 3%, which is incredible and historically low, up to like 7 and 8%. Now, there were some operators out there that had the opportunity when they were taking on this bridge debt to buy what's called a rate cap, which means that their interest rate could only grow a certain amount if they purchased this rate cap up front. Intelligent operators purchase these rate caps. I purchased these rate caps. Now, lending rates at that time were predicted to stay low, but I always wanted to err on the side of being conservative. But some operators did not purchase these rate caps. Other things like insurance costs have gone up more than we would have underwritten before. Different circumstances such as these are forcing some operators out there to sell. And these opportunities are starting to hit the market now. And I see them very much continuing to hit the market in the middle of this year and then moving through the rest of the year and into next year. And I think that's going to create great opportunities for people that are positioned to take advantage of them. It's also driven pricing down 20 to 30%. So multifamily is now on sale. We're able to buy properties 10, 15, 20, 30% lower than we were a few years ago at the height of the market. And maybe one of the best things for me as a guy that's been plugged in the industry for a long time is, as I said, a few years back when everything was appreciating, going up, 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 everybody wanted to be in. But as soon as things get a little bit fearful, a lot of those types of people step away because maybe they don't feel completely confident they understand what's going on in our position, and they know that they can't just get in and everything is going to go up, up, up. So everybody moves on to other things. But when I came into this industry, I was going to be a career multifamily syndicator investor, and I'm just going to stay on top of the market to navigate the ebbs and flows. So with the pricing being on sale and owners being forced to sell, there's going to be terrific opportunities that are going to come on the market, and I'm going to be positioned to realize them. So there's actually more opportunity, I think, now than there was just a few years ago. And that's why now is a great time to invest in the multifamily market, and why I'm as pumped as I've been in quite a while here in 2023. I'm planning on winning big in the next 5 to 7 years. Sure, there might be some short-term challenges over the next couple of years, and we plug all of this into the underwriting, a recession. But we also, the types of debt that I'm putting on now, agency fixed rate debt is coming back. So I'm putting on long-term fixed rate debt, secured debt. So we're going to be able to ride through that. And then what's going to happen is this curve's going to go up. And that's where we're going to realize the tremendous opportunity and growth on these investments over the next few years, and be able to navigate any short-term challenges, which are already baked into our underwriting, because we're able to take what we now know and apply that to the underwriting as we're looking at deals and we're buying them on sale. So hopefully everybody can see that for seasoned operators that have experience and are staying on top of their education, know what they're doing, there's going to be opportunity, and passive investors have the opportunity to form relationships with people like myself and other seasoned operators that are going to be taking care of the opportunity. So now is a super great time to invest in multifamily. How you can invest? Well, the who is the most important part, as I've talked about, and I hope you've gotten that. So what I would say is you want to find seasoned, skilled operators that are staying on top of what's going on. There's many out there. I'm not the only one. You have an opportunity to meet me today, talk with me, hopefully get on my passive investor database, and we can form an SEC compliant relationship where I can offer you investment opportunities in my projects. There are other operators out there. You want to find operators that have a great reputation and have been in the market for quite a while and have a proven track record of success. And to me, the who is more important than the market, the submarket, the underwriting. And I partner with people on these deals, just as I'm asking passive investors to partner with me. I'm not the only GP or sponsor on these deals. So before I even talk to anybody about a specific deal or the underwriting or the submarket or the market, I'm focusing on the who, and I'm focusing on the partnership and doing my due diligence on that before I ever even bring an investment opportunity to my passive investor group. I think it was touched on when the registration link went out for the event that we were going to talk about how much it would take to get into one of these projects. I would say that very often there are minimums set on these projects, anywhere from $25K to $50K to $75K. But the operating agreements for these projects are typically read that the manager at their own discretion can take any amount they want. So I say all that to say that sometimes, given the syndicate or the SEC model, if we're able to take a lower amount and fit somebody in, I've done that in the past, and I've taken people as low as 10K and got them into my deals because I want to help people. I want to give back and see people like the woman that invested with me. She did have 50K, but there are a lot of people like her that maybe they don't have 50K, but they have 20K, and they want to double that money and then continue to grow it and move from there. So if I have an opportunity to work people into my investments at lower amounts and still be in compliance with the SEC and the regulations, for doing these types of projects, then I'm going to do that to help out people. And we're here at Quest today. And obviously, we accept cash into these deals. But I, over the years, have had a long-standing relationship with Quest. Obviously, there are other custodians out there, but Quest rhymes. Quest is the best. So there's a good slogan for Quest if they want to use it. And no, Quest is terrific to work with. They're easy to work with. They're easy for sponsors to work with because I work with different custodians, and some can be a pain in my butt, but that's not the case at Quest. They're a buttoned up organization. And if you're looking to, and you have an IRA and you want to move it into a self-directed IRA, and then you're able to invest in a multifamily project such as mine, and then the money grows tax deferred with inside of that IRA, and Steve and Quest can speak a little bit more to that, but I've had more IRA investors through Quest over the years than I've had with any other custodian. So that's my presentation. We were able to touch on the benefits of apartment investing, why it can be so lucrative, why now is a great time to invest, and also how you can invest. Steve, do we want to open it up and see if there's any Q&A? Yeah, that would be great. Anybody in the room have a question? I must have done an extremely thorough job. Yeah, I've given everybody that's here in the room, you'll see my card and also my information up here. I would just encourage you to go ahead and send me an email, connect, let me know that you were either here in the room today or you saw me speaking online, and we can get to know each other that way, form an SEC compliant relationship. And then once we do, I can make available to you potential investment opportunities in my projects, as I'm going to be winning big and taking advantage of these great opportunities that are here now and are going to be coming in greater quantity very, very soon. Anything online? Okay, well, we're going to bring... Yeah, great. We're going to bring Steve back up. I appreciate the opportunity to speak with Quest. And thank you, Steve. All right.
All right. Thank you. All right.
Hey, Steve, we do have one question for Aaron.
All right.
This comes from someone named NDS. With the recent bank failures, how has it impacted the MF financing, i.e. rates, LTV, reserves, etc.?
Yeah, well, I'm looking at, I can just tell you what we're looking at, fixed rate agency debt now. I closed a deal that was a 168 unit deal in Arlington in November, and we went with a conservative fixed rate debt, even with lower leverage, just because it's a safer bet. And that's kind of what I'm looking at. And in that deal, we got just over about 50% leverage. And now I'm hearing, and I don't have a current opportunity, but I anticipate some coming soon, but I'm hearing now with fixed rate agency debt that you could get like 60 to 65% leverage again. So we're certainly getting more leverage. And not an expert in the field, so I wouldn't but regarding the bank failures, I would say, and I've seen different lists come out, that you need to see where a bank has their money invested to determine if they're at risk for a potential failure. But that's what we're seeing. I'm seeing more leverage, and I'm not really too worried about it. We're looking at fixed rate agency debt. This tends to be Fannie Mae, Freddie Mac agency debt. And that's what we're seeing in multifamily. So our leverage is good right now. Yeah.
Let me ask you. Trade off. So you said you do all of your investing in Texas?
Well, every deal I've done as a GP or sponsor has been in either Dallas or Houston. My wife and I have passively invested outside of Texas, and I am talking this. I'm glad you asked that question came up, because I'm looking in other favorable markets. Okay, and what makes a favorable market? One thing is that despite what's going on out there, in a good market, the fundamentals of multifamily are strong right now. And what makes a good market? Well, you're looking at job growth, economic growth, population growth. Certainly that's going to be going on in a market like Dallas, Fort Worth. But there are other great markets, and I'm looking to invest there as well. My wife and I actually jumped on a plane just about a week and a half ago because I'd done 3 Zooms with some sponsors that are doing things in the Tampa, Florida market. And that's another great market. And so we took time at our own, expense to go ahead and build that relationship more, to look at doing some projects in Tampa, which will be more great investment opportunities later that I'll be able to bring to my passive investor database. So as a GP, so far, everything's been in Texas, but I'm looking to expand that. And we've invested passively in projects all over the country in different favorable multifamily markets that have really good, strong, growing fundamentals.
And then of the Texas market, what's your favorite? Or what do you think has the best outlook right now? You don't have to say Dallas.
Yeah, well, but honestly, my favorite is Dallas, and I've been plugged in here for many years. When I first got started and did my first syndication deals, I also worked on the buyer brokerage side of the business for a couple of years because I saw it as a means to an end to put my feet on more deals and look at more underwriting and get to know the brokers. Like I said before, to get in on these opportunities, you need to get in with people that are in the game. And much like any other industry, 10% of the brokers are doing 90% of the business in Dallas, Fort Worth, and the other 90% of the brokers are fighting for that remaining 10%. So I do get to know some of the 90% as well, but I also mainly focus on those other guys, and I built really strong relationships over the years to where they know that I'm the type of person that's going to do what I say I'm going to do, and I'm not going to say what I'm not going to do. And that type of reliability and credibility that you build over the years enables you to, build those relationships. So not just because of that, but I'm more plugged in Dallas than I am in any other market because I have such experience and I've built those relationships with brokers, with vendors here in this market. But all the different Texas markets present opportunity, and it can be a little bit different, but there's opportunity throughout Texas in all the different markets.
That's what I hear. And then let me just ask this. You've touched a little bit on doing the passive investing. What would you say, or would you give any hints or tips for anybody who's actually looking to be a syndicator themselves?
Yeah, if anybody wanted to, the first thing you need to do before you start looking at deals and underwriting deals and trying to get ahead is invest in your education. And I told you that way back when I was first getting started that I embraced the mentor model and invested in my education. And even after being a seasoned operator for 12 years in the business, I'm still plugged in with top mentoring and education organization because I want to stay on top of the market. And a lot of the people that we meet in there partner on deals and invest in deals together. The gentleman's group that I'm plugged in with is a guy named Brad Sumrock. And some of you might have heard of him. I would go ahead and certainly look him up online. I'm happy to make the connection to Brad's organization if you want to attend an upcoming event. And even if you're going to be a passive investor, I think it's important to be an educated passive investor. You don't just want to be trusting in somebody's track record of success. You want to be able to vet sponsors and know that they know what they're talking about because you've invested in your own education and you yourself understand. In fact, unless you're an accredited investor, you have to understand the nature of the investment. So you have to be educated somewhat in knowing what you're doing. So yeah, I invest in your education, whether that's with Brad Sumrock, who I think runs the top national mentoring and education organization, or any others out there, or books. Obviously, there's a ton of good information, but there's also bad information out there. One of the great things about the internet is so much information, and sometimes maybe it's hard to decipher what's good from what's bad. But I can highly recommend that organization that I remain plugged in at. But that's number one. Before you're going to put your money on the line with anybody, or if you want to become a GP and do it, before you're going to waste time, you want to shorten your learning curve. and make sure that your fiduciary duty to yourself with your own money and to your potential investors. You need to invest in your education.
That is great advice. So thank you. I appreciate the extra questions. And these are things I know always get asked of speakers and sponsors. So real important. And, you know, I think Aaron touched on it to an extent, but again, I think one of the critical things is, again, having your team. You know, it's the educators, but it's also the CPAs, and, you know, it's depending on the type of investing that you're doing. Just, again, make sure that you have created a solid team. That could be an IRA custodian as well. You know, it just is all about how you're going to be doing your investing, and, you know, make sure you're focusing on all those things. All right. So, yeah.
And that works now.
Okay, Aaron, thank you so much, guys, for hosting this. Today's already came a little late. So now that you are talking about for people they want to become a GP, so how do you vet the partners that you are bringing in with you in a deal? Like, what kind of questions, or how do you go through your due diligence and have your partners to bring your partners on board?
There we go.
Okay, the question, just in case anybody didn't hear it, was I said earlier that most of these group purchases, I'm not the only GP in the deal. So there are other partners that I'm working with to put together that project and then see it through in totality to make sure it's successful for all of our different passive investor groups. And for me, as I said, it's people first, okay? Jonathan, appreciate the question. I know Jonathan, thank you for being here. Better late than never. Glad you came. And so it's taking the time to get to know people before I jump in a deal with them. Remember when I said I've done 13 deals as a GP, but I get a lot of opportunities from other sponsors doing deals to invest, largely because they know I can bring a lot of passive investor capital to the deal, and I bring experience to the deal. I might be able to sign on the note, even though these are non-recourse loans that we typically do. We need to have people that sign on the note as guarantors, just in case recourse is triggered through fraud and deception. And I've never personally seen that, but that's what lenders need. So sometimes I have to sign on notes, and sometimes I don't sign on the notes. But to answer the question, I'm taking the time on the front end. So I have a lot of people, because I can do the things that I've done and have the experience in the industry. They have a deal teed up, and I get emails from people that I might have met at a few events, but I know them, but I don't know them. And I only do business with people that I really truly know as co-GPs and co-sponsors. So, and I've seen other people, other sponsors jump into deals with people they don't know. And I've seen these partnerships go bad. And I don't want that for myself, for my investors. And I don't need that stress in my life. I like to sleep at night. So I spend quite a bit of time on the front end getting to know people. So when I get those offers, hey, Aaron, I got a deal. You want to be a GP in it and bring some $2 million in passive capital or more to the deal, or whatever it might be? I need an answer in 24 to 48 hours. And I can tell you that over and over again, I've given the same exact answer. I've said, for this particular opportunity, it's going to be no, because I don't really know who you are. I said, if you're interested in potentially partnering with me, let's take the time to build a relationship. And then when the next opportunity comes down and we built the basis of that relationship, then maybe I'll be interested in partnering with you in that opportunity. So I've said that, 50 to 100 times over the years. But because of that, I've never had an investor lose money in my projects, and I've done very well. Grew our net worth from 400K when I got started back in 2012 up to about $7 million over the years. And as I said, I've made tens and tens and tens of millions of dollars for my passive investors. So it's that relationship first approach. And that's before a deal, a market, the sub-market, before we talk about any of that. So I'm spending the time to vet and get to know people. I'm not saying that our values have to be exact, but I like to be partnered with people that are value driven, that have strong things that drive them. Oftentimes they are aligned. There are things like family, there are things like legacy and things like that, but they don't have to be in perfect alignment. But I do want to partner with value-driven people. And then the other most important thing, Jonathan, is roles, responsibilities, expectations. I tell people when I'm talking about potentially partnering with them that let's never be afraid to step on each other's toes. Let's always say what needs to be said, because I see a lot of people that don't do that. They say what they think the other person wants to hear. And I don't do that because I would rather disqualify a bad partnership on the front end than I would to get into a partnership. And I need to feel good about it. So, and that's understanding all the different roles, responsibilities, and expectations that are going to go into a collective GP partnership, and making sure on the front end that everybody knows exactly what they're going to be doing, and also is quite clear about what they're not willing to do. So there's that understanding as well. So that's what I do on the front end before I even look at a deal, submarket, underwriting with any potential GP partner.
Awesome. Okay. In the time that we have left, we're going to switch gears a little bit, and we're going to get into what we call the deal pitching. So this is your chance to get up. If you've got a deal, or if you're looking for a deal, then you can come up and give us your elevator pitch real quick. But before we begin, I am going to turn it over to our sponsor, Ken. He has an interesting opportunity that he wants to present. Ken, just as a way of introduction, came to us just recently. He is starting to become a real estate investor and in the process of getting mentored and all those kinds of things. But he also has an opportunity that's in another area of self-directed IRAs, not real estate related. It's actually private company stock, which is something I've been seeing a lot more of lately. So people who want to get in companies ahead of the curve, pre-IPO, this is becoming more common, where companies don't want to go public initially. They may plan to down the road, but for their initial capital raise, they want to do it on the private side. And so he's going to give an example, which this isn't an endorsement, mind you, but some Quest clients have expressed a lot of interest in and even begun to invest in. So we want to give him a little chance to talk about the product and see if there is interest and the ability to follow up with him.
All right. Thank you, Steve. So I'm Ken Lehman. I'm an investor and board member of a startup company called Intelligent Cranium Helmets. And we are building the world's safest and most technologically advanced motorcycle helmet in the world. You know, a lot of the technologies that we enjoy in our automobiles have not yet made it to the motorcycle industry. So we're bringing all that technology into a helmet. This helmet has GPS and can navigate the rider anywhere they want to go through a heads-up display. It's got crash detection so that if the rider is in an accident, it's going to call 911 and the rider's emergency contact person and tell them you've been in an accident and exactly where you're located. It also has a camera in the front, if you notice. That camera in the front can record the rider's ride and stream it on social media. That's a real cool thing that a lot of motorcyclists like to do. It's also got two cameras in the back. The two cameras in the back show the rider through the heads-up display what's in their blind spots, what's on the left of them, what's on the right of them, and what's behind them. It also has proximity sensors in the back. So again, if somebody gets too close to the left or the right of them or behind them, it's going to notify the rider that somebody's too close. There's no buttons, there's no knobs, everything's voice controlled. You just talk to the helmet to control everything about the helmet. It also has an app that it's connected to on your mobile phone. So you can connect apps on your mobile phone. You can send and receive calls, you can stream music to the helmet, you can talk to another rider, you can also talk as a group of riders together. The demand for this is huge. We've already pre-sold over 300 helmets. We've raised $175,000 on Kickstarter in 72 hours. So everyone wants this thing. So basically what we're doing is we're raising funds to get over the finish line with it. We only have 15% of the remaining software development and tooling to get into order fulfillment and production. So we're looking for a few of you that want to come alongside us. We're again at the tail end. So the risk to the investor is minimal compared to most startup companies that just have an idea and drawing on a napkin. We're much further down the line. So if you want to chat with me about it, I can tell you more in the back here. I do have a flyer that you can take with you. And for those of you online, you can go to our website, which is ichelmets.com. I for intelligent, C for cranium, helmets.com, ichelmets.com. Thanks a lot. Appreciate it.
All right. Love hearing about that. And I have confirmed you can use that same helmet for snowmobiling. So it's multi-purpose. All right. Anyone else want to do a quick pitch of something or something they're either looking for or something that they have that they are looking to get some interest in? The shyest group yet. All right. Well, then I just we'll conclude a little early. I want to thank you guys for showing up. We really appreciate it and want to say thanks to our online audience as well. And just remember, ongoing events here at Quest. We've got our social every third Tuesday of the month. And next month, our Lunch and Learn, it may be the last one we do for a little while because we will be unveiling some different types of education. There are going to be some LinkedIn events that we start doing, but hopefully we will also be getting the Lunch and Learns up and running again in the near future. It seems like it's always been a good event here in Dallas. So stay tuned. Check out our events page, but hope to see you here again sometime soon. Thank you very much.